Time now for an in-depth look at the market news this afternoon, and for that I'm joined on the line by Mr. Daniel Yu, global strategist at Yuanta Securities. Mr. Yu, thank you for coming on today.
Good afternoon.
Well, stocks in New York closed a little bit higher on Thursday. The big tech stocks up around 1%, Tesla up 2%. What's the story in the global markets?
Yes, as you said, U.S. market has recovered slightly, but it continued to show some volatility on Thursday. The main reason for the rise was because the tech sector rebounded from the recent losses, and also the fresh data showed new home sales exceeded an annual rate of 1 million for the first time since 2006, easily beating the market expectations. And market kind of shrugged off the claims that the initial claims for the unemployment came in at about 870,000 last week, higher than expectation of 840,000. Clearly, there's more additional boosting measure is needed, and Secretary Treasury Stephen Mnuchin said that the still additional relief package for the pandemic is needed. And because of that, I think that the market took it as a positive news that some kind of boosting measure will come in quite soon. All in all, market seems to continue to show some sideline trade because we are not sure exactly who will win the election on November 3rd. Depending on who will win, level of the boosting measures will be decided, and also what kind of the tax rate will be applied in the future. So all in all, it's kind of sentiment-wise waiting and see, and market might not be moving in any major direction until probably election if this kind of trend of economic news comes through.
Well, the KOSPI and the KOSDAQ recovering a little bit today as well. Looks like foreign investors selling the KOSPI, buying the KOSDAQ. What happened in the local markets?
Right. As you said, foreign investors are selling Korea because Korean won appreciated very quickly last Friday. But ever since then, we start to see U.S. dollar index rising, and it has reached well above 94.5 level. And due to this, Korean won is not appreciating anymore, and it's actually depreciating. And this is the result for the foreign net selling. Also, in terms of economic condition-wise, we're not sure how quickly Korea will recover from this pandemic crisis because of the additional new cases for the COVID-19. All in all, the government have decided to boost through the additional fiscal policy, but that policy-wise, we have to wait and see how much impact we'll have. All in all, overall market seems to be trying to look for some kind of trend at this point in time because Korean market has been one of the biggest, strongest performing sector, performing index amongst all the global markets. As the Korean KOSPI rose 80% and the KOSDAQ rose 100% from bottom to peak.
Yes, remarkable. And now with social distancing, though, strengthened recently in Korea, we see that consumer sentiment this month is down by quite a bit. Social distancing has, of course, been eased somewhat since then, but what do you see happening here?
Yes, clearly this is putting some dent to the overall sentiment. As you said, the composite consumer sentiment index dropped to 79.4 in September from 88.2 in the previous month. And all 6 sub-indexes also declined as well. The domestic economic conditions, the future housing spending, housing income, living standards, all in all, it seems to be showing a declining trend. Clearly, continuation of COVID-19 issues putting some pressure for Korean consumers. Also, we know that the consumer debt as a percent of GDP has reached highest level in history, well above 90% territories. All that is putting pressure for Korea. What we need to see is a global economy recovering, resulting into export numbers coming through on positive scale. If that actually happened, then Korea will be relatively better. But so far, it seems that we have to wait and see what the numbers are looking like in the future.
All right, Mr. Yu, we'll have to leave it there for today. Have a great weekend. Thank you for coming on.
Thank you. You too.